Welcome everyone to the Kendall Report. It is Monday morning, and I guess I've been in an interesting phase in the channel. So before I get started today and we get into what's going on in the markets, I'm yet making. I've been talking about how I don't like these mornings. I keep missing the evenings. So the reason why I started these morning shows is actually been delayed. So for lack of, so as you know, I'm going to take off the last 2 weeks. I believe the 16th of December is the final broadcast for the year. And so I'm yet again going to change things. I want to go back to the evening shows. And one of the issues that happens is I don't have enough time to prepare to do a good job for what I need to do here in the morning. I've tried doing some overnight stuff and it's not working. I get in here and I'm scrambling to put this thing together and I feel like I'm doing not my best work. And there's a lot of things going on in the planet right now. So having said that, we're going to go back tonight. I'm going to do 2 videos today. I'm doing this one now and I'm going to do the regular night one, which will be at 9 o'clock Eastern time tonight. So 12 hours from now, I'll be back live. I'm just doing it. I think I have a lot of European folks. We got a lot of emails from folks disappointed that I changed like I did. And I think it serves everybody much better. So I know you folks, you can comment, tell me what you think. I know I've been a little off the map here lately, but anyway, let's get into what we're here for and get into today's video. So a whole bunch going on here, folks. So the question is this Chinese unrest really causing issues? And maybe it's causing some market sentiment, negative market sentiment, but I'm not sure that that's the primary issue. As I had told you last Wednesday, the algos were predicting that Wednesday was going to be the high of this particular sequence. Once again, I'll propose this and I'll go through this in the details in just a minute. But I think that the primary thing that is happening here as far as the Chinese go is really not that big. But what's really happening is we're coming into that year-end situation I talked about. There's a whole lot of things just to be worried about here in the U.S. You see oil prices dropping. You see the Treasuries into a 360 handle. And I remember just talking about even a 340 handle. I'll go through those details here shortly. But everything's coming down really hard. But the question is it really about the Chinese? I don't think so. I think it's more worries about our economy here. This is a huge week, and I'll cover what we're going to go through. And this is the thing I miss. I miss the Sunday night setups. I feel like I really set everybody up for a really good situation. I think, like I said, I'm going to do a number of things here. And the reason why all the craziness around me is there's a whole lot going on in the background behind me from a business standpoint. So just know that I'm trying to find the best way to deliver the best information to you folks. Just going back to that thread for just a second. But yeah, so there's a ton going to happen this week. I mean, we've got unemployment numbers, all that stuff. Let me see what time we got here. We get about 6 minutes. So we'll get the opening set up here, which is coming in quite a bit weaker this morning. But the whole plan from the standpoint of, I'll go through, once we get through the algos, I'll go through this other stuff then. So we'll get it all set up. And this is part of the issue, is just trying to get everything set up for you folks so I can do a good job. Let's take a look at what's going on here as far as the open. We got the futures off on the S&P down 34 handles, down 0.87, where you'll see we're trading pretty close to the our S3 STX levels. We got NASDAQ down 7.77, down 91 handles, and the Russell right now is down 14, down 0.8 as well. So everything's off pretty good. Treasuries are trading 369. They traded down to 367, 3668 earlier, and so there's a lot going on there as well. And probably one of the big things to watch for, there's so much noise around crypto. The Bitcoin's trading at 16,174 as we speak here, and there's some really, I think, some implications here if everything starts to fall apart. This whole FTX thing is far from over. And anyway, so let's go ahead and take a quick look and get to another screen here and take a look at the setups, look at the market grid numbers, and go from there. So we'll get over to the right screen. So let's get to ES first. And I'll bring that on screen for you so you can see it. So here we go. On STX right now is 407. We're trading below STX. We were just above it a little bit ago. So here we go. The resistance now is going to be, the S numbers are going to represent resistance. R1 4038, we actually had a high of 4024, which is basically S1. So we just came in weaker. These numbers are a little bit, I guess I wouldn't call them jacked around, but because of the holiday, I mean, we just traded a few hours on Friday, so there really was some strange things going on there. But if you look at all the PPMs, I'll show you the algos here and once we get open, but everything is pointing more negative here for the next couple of days. And I think it's going to be a very interesting week in backfilling. Once again, what do? I mentioned this earlier, the 200-day right now, it was at the 4068. We came right back under it again. You know, are we going to get another big rejection? VIX got to 20. The old story, sell 31. I think we printed 34 on VIX, and now here we are. You know, VIX right now is at 22, but it was at 20. So once again, you know, sell 20, buy 31. You keep making money. It's amazing how it's investing made easy, right? But the patterns that are setting up here are pretty interesting. Let's get over to the NASDAQ. Just look at the grid there. The grid is holding in a little better here. We had a low of 16,642. S3 is 11,637. So basically printed S3. 11,592 is STX. And R1 is a sort of a dream right now, 11,828. And I'll show you when we get into the algos and those things here in just a few minutes. So hit RTY and we're going to get the open here really fast. So RTY down 13 handles, and we're looking here at 52 low, 1847 low, STX, R1 1875. So let's get over to the other screen here and take a look at what's going on for the open. We're going to get an open any second here. There we go. All right, there we go. We're off. So we'll see if we get a little bit of a rebound. I think we should get a rebound back to 06, 07 on here. As always, we get the volume spike that starts to come in. You can see it growing this last bar over here. So here we are rebounding pretty decent. So the rebound probably is going to be a stabilization here for the next couple hours. So we'll watch this setup here just for a few minutes. Bear with me one second. Yeah, so we're still getting that rebound. Here's '06. Like I said, '06, '08 is probably where we're going to get there from that standpoint. So
order filled.
Okay, so yeah, so there was the rebound in there. As far as everything goes, I think we just stabilize in this range we've been in for the last couple hours. With the lows have been down around 96, that's 39.96, and the highs up around this 408 level. So that looks like that probably going to be the thing coming here for a few hours. Let's go ahead and get into the algos and all that. I see a couple comments here. Some of you, let's do both. I wish I had. So real quick before we transition into the algos, just a comment, and is that what I'm thinking about doing is adding a live stream, intraday live stream in at some point. I'll let you know all those changes. There's going to be I think some changes as we come in. When I come back off a break, then I'm going to formulate all this stuff, and I should have a much better access as well when I'm gone this time. Thanks to Elon Musk, I have a real internet connection in my remote location where I'm going to be at the end of the year. So that's going to be helpful and give me a lot of access to doing different things I haven't been able to do. It's been a big burden, so hopefully everything works out well there. But we're still seeing a rebound here. Here we are at 1025, just starting to see continued rebound. Let's go ahead and get into the algos and take a look at what's going on there. And as always, I'm going to show you, it was interesting. We had the algos were predicting, maybe I should just start there, but they off the 1 minute open. That's why the algos were projecting for a stronger a recovery off of here, and that's what we got. You can see they're starting to peak out here now, so we should see some consolidation. My estimate was that we'd get up around '08. We actually got just a touch higher than that. So all of the algos are projecting that we're going to stabilize up here around these ranges. This is a 1 minute chart we're looking at, but as we were coming in, if I were to roll this back and run a replay of this, you'd see that all the algos were pointing to a rebound off of the opening. The 5 minute here is the same. 5 minutes suggests that we're going to stay above this 200 period moving average. This is all S&P 5 minute, and the algos are stabilizing here. These things have been really, really accurate, folks. We released these about 2.5 months ago, and they have been. I had a great comment from somebody that said it feels like he's cheating and trading. So it's like having a little bit of foresight in here. They've been absolutely amazing. I'm just telling you that these are one of the this is a direct involvement of the community and why these things exist. So I collaborated with some members from the community. You guys know who you are. Thank you again. And but we're continuing to see this strength in the markets here. Let's go over to the hourly chart now. And hourly is also suggesting that we're going to see further consolidation here, probably moving up toward the 40 period moving average. That's as high as 40.26. So maybe we get that. Actually is around S1. I was just showing you a minute ago. And it looks like we're going to see recovery for that. Now this is hourly. We're going to see stabilization above the 10 period moving average. Algos are suggesting we're going to stay above the 10, and actually that the 10 is going to turn up. So we've got a pretty good shot here at this 40 period moving average, which is around 26. Last trade right now is 14. So they had a pretty nice rebound there, and the algos were projecting that across the board. We can take a quick look, and I'm sure they look the same here. This is an hourly algo on the on the NASDAQ, still looking same thing. 40 is up here at 11,801. So go back to those daily numbers. Those of you have the indicators, look at those daily numbers there, because those are going to be your R1 is going to be probably a peak in here. So like I said, this is what I was trying to get to just a few minutes ago, is I don't think China has anything to do with anything. It's just year-end elements that are coming in. We got a big week ahead when I'll talk about the releases that are coming out this week shortly. But the bottom line is we're seeing the markets do what they do at this time. I've been talking about this last week, and I continue to suggest to you folks that what we're seeing is pretty normal. And we got unemployment coming in. We got one more Fed meeting. There's still lots of dialogue around the Fed. 50, 75, 50. I think it's probably a 50. We'll get into that more here lately. But the algos across the board, let's bring up RTY just so we can get them all here. RTY not as strong as the other indices. So, look for this to lag a little bit, but there's still an upward bias across the board. So let's go ahead and come back over here, and let me just talk about a couple things that I think are going to be in influence this week. We'll go into the database and through our normal technical overview of everything that's going on. But we're really, as we come in through this week, we've got a lot. We've got no news at all today. Okay, so we have tomorrow we have Case-Shiller, we've got consumer confidence, we've got FHA prices from housing. So we got a bunch of housing, and they're moderating a lot. They were up around 18, 19. We're looking at 10.4 numbers now. Consumer confidence coming down from 102 down to 99.5. On Wednesday, we got ADP. We've got GDP update. I'll update that in detail tonight. It'll be a lot easier. I feel I'm integrating some concepts here, but I really feel like I'm in competition with the live market right now and talking about it. I think that's the other element. It's fine to do these lives, but there's so much information I feel like I need to get to you folks to give you good context of how to trade this week. That's why I'm going to start doing the nightlies. But Thursday, we got claims 235. Continuing claims are back over 1.5. They were at 1.551 last week, and I think they continue to climb. I think that's one of the elements that's an unspoken element. If we continue to see continuing claims climb over the next several weeks, that's going to tell us that this unemployment situation is that's what the Fed, I think, is trying to break. They want you not to have a job so they can beat inflation. And so much for their dual mandate, right? I think they're a little torn between the inflation and employment at the moment. And so I'm watching those numbers pretty close. I don't think we see anything big on the unemployment numbers. I'll go through that in more detail as we go through this week. But on Friday, we're looking at unemployment to uptick by 0.1. They're looking at 215K in jobs. So, but I don't see anything happening. There's not going to be a big reveal on that ahead of the Fed meeting that's going to say, oh, look, it is breaking. They're going to back off. I think they're signaling already they're going to back off. But you can see just activity here, looking at 368 on the 10-year right now. This yield curve is actually setting up exactly like I showed you folks about 2 months ago, is that we would end up somewhere into the four handle on Fed funds in the 13-week. Right now, the 13 weeks, 416. We're there. We're basically, and the 2 years up a bit more. That's that hump in the curve. all that stuff. I'll go through more details here, but that yield curve is setting up and it's getting more inverted as yields drop. So it's not really anything about a robust market by any term, or robust economy, I should say. And the market is not the economy, or the economy is not the market. However you want to look at that, there's no relevance there. There sometimes are, but it really too many people try to tie together what's happening with that, trying to correlate the two, I guess is what I'm trying to say here. So overall, this is going to be a pretty important week ahead of the coming into the next Fed meeting. A lot of stuff that's going to have to be considered. And what we're seeing here is, like I said, we're pretty much as expected. We're backing off that. The market's starting to stabilize. Equity markets are stabilizing here. So you can see that there's a pretty reasonable, I guess, sideways expectation being built in the markets here. So let's go ahead. Let's get into the Wavetech database. I think that was fairly interesting what's setting up there, and I think it's revealing as well. So let's go ahead and get into that. All right, so I've got the weekly up right now, and I've been talking about that a fair amount, and we need this 42 number. We got up to 3613. We actually had 1,189 new buy signals on intermediate, only 71 sells. So we definitely had a bullish rotation on the intermediate database. This is something that we'll have to see how it unfolds over the next several weeks as we go through the month of December. There's still a bias on I'll show you here in a few minutes in the technical, on the weeklies and the monthlies, a little bit to the upside. And I'm thinking that we're really just seeing this year-end rotation, as I talked about earlier. So let's go ahead and let's go over to the daily so I can show you what's going on there. So the daily database remains at 82.89% bullish. So we're looking at a really robust short-term database. It didn't really downtick much. Like I said, we had kind of a nothing day on Friday, so none of these stocks really changed from Wednesday's highs very much. And even though we're seeing a little pullback here, we'll see, like I've been talking about, and I've been showing you this this chart here. I'll see if I can bring it up again for you, because I think it's interesting to keep in perspective here. This is the intermediate. This 42 mark is the one I always talk about, and it sets up a forward-looking expectation for multiple months. Well, the same thing happens now. We're at 82% on the daily. So what I'm expecting to see is that the database will actually, the database will actually start to back off here. So I'm going to try this again so you can actually see this. So what happens right now, this is the intermediate database, so the 72%, this is just an average number, but we're at 82 on the daily, and it starts to decline, and then that's the final leg on the daily. However, on the weekly, we have not reached the 42. So if we get above 42, we're going to have a forward-looking market for literally 150 to 200 days forward. Doesn't mean it's going to expand like this chart did. And this is the most recent chart. We're over here right now. We're up to about 36%. So we're not exactly at the level where where we need to be just yet on this intermediate. But it's important to understand, like I said, we've got all 12 sectors long. We use a Thomson Reuters breakdown of the sectors. All 12 are long, and everything's in the green right now. And including energy is still up 13%, but it is close to its cycle, the end of the cycle that it normally holds. It's 38 of 48, so it's got about 6-8 more days to go. You can see several. These are the early rotation that came in. Capital goods, conglomerates, looking at consumer cyclical. You can see all the ones that are close to or exceeding their average hold. Those were the early trades that come on. Transportation was another one. So we've got different tiers coming in here. So they're on an index basis. I could break down, because there's 102 industry groups, so we could break that down as well, and get into a really deep understanding of where the rotation's going. But this is all the short-term database. I'm just going to go over to the weekly here just for a second here. You see we only have right now 5 of the 12 sectors, and everything that's in there, we have services, transportation, conglomerates, and the basic materials. And conglomerates is the only negative sector right now. We still have all these other sectors are not necessarily negative. They're just don't have any trending positions. So we're going to need to move all of these numbers up substantially. Like I said, we're at 36% on the symbols. The groups are 48, and we're 41 on the sectors. The sector number needs to get up above the 70 percentile range. So we need to get more like 7 to 12, 8 to 12 long to actually get into a really positive rotation. But that typically happens around this same rotation of the markets. So let's get into the technicals now. Okay, so as we look at the technicals on, this is the 1 hour. So we looked at this a few minutes ago. Let's go ahead and take a look at the daily. And the daily has an interesting configuration. And we're sitting here, like I said, right now the STX is 39.89. I'm not sure. When I was looking at the other chart earlier, I thought we were above that. So S3 is 39.99. STX is 39.89. So we're trading right now at the 40.10 level, which is at S2. So the numbers I showed you earlier, I'm not sure what I was on. I apologize for that. But we're seeing on the daily that we're going to get into trend mode down here on the 10. So the way that's going to happen is we're going to have to trade below the 10-period moving average. 39.90 is that 10. And so look for the market to get below that. My expectation is we'll get down toward the 21-period moving average. Right now it's at 39.14, and it is rising only about we'll call it 10 a day. So over the next several days, it's going to end up in around 39.35, 39.40 is going to be your extreme level that you should get to. There are some Fibonacci targets also on the downside, which are suggesting low target 1 is all the way down at 38.27. That would be fairly extreme since it's Monday. I'll go through the weekly charts as well. But this is these moving averages are going to be dominant in this pattern. And right now it looks like we're going to stay flattish on the 21 over the next couple of days. So that looks like it should be challenged. The algos are suggesting we're going to break through the first and second derivative. We've already done the first. So we get through that, then that means we test this moving average value right now. And like I said, that's 39.14, but rising about 10 handles per day. So look for a 39.40, I'm going to call 39.60, 39.40 as a range to the downside as far as this market goes right now. It should be a fairly good point. So let's go over to the weekly just to get a handle on the weekly. Still overall positive, but this is what I've been telling you going back last week. Is what it really is telling us is that we're going to stay above the 10-week moving average. That's 38.32. That's fairly similar to that 40-period moving average on the daily chart. So there's still upward targets here. The 40 is also, like I said, similar. 40-week is similar to the 200-day moving average. That's sitting there at right now at 40.36. I didn't mention the 200-day, but it was around 40.30, 40.60 range. And so the real question is, are we going to get a rejection? We're not seeing, at least from the algos, are not predicting a big surge. In fact, what we're looking at is over the next several weeks is a flattening of the trend itself. So most likely what that gets us into is a sideways trading range. I'll break that down more as we go through the week in the evening in an evening video. So I'll be able to do a much better pattern from setup from that standpoint going forward. But the bottom line is that weekly, it looks like we're going to probably get sandwiched between the 40 and the 10 week. So that number is 40.36 to the 40 week. The 10 week is 38.32. And so that's a pretty solid number, but that gets us down. That's an extreme. I still think the 39.60, 39.40 off the dailies will be at least the initial support as we come through this week. All right, next we'll go with the NASDAQ, and this is the weekly NASDAQ, and we're same kind of pattern. It does suggest that we have another couple weeks of upward bias, but once again, what this indicator is tracking is the 10-week moving average. Just tells us we're going to stay above the 10-week on a. That's all it's telling us. It's not telling us we're going to break out. It's not necessarily a rally, but it looks like to me, just like I discussed on the weekly S&P, is that we're just going to stay sandwiched down here between these moving averages. Now we have the 200-week moving average in there right there at 11,839. It's trying to get back above there. If we look back at the last 4 weeks, we had, that was 11,769. We were 11,848, 11,708 with the 200 at 793. We've just been hovering right around this 200, and it is still advancing or moving up. It's got an angle of attack to the upside, but that's really more of a stability. And like I said, we get sandwiched between the 10 and the 40 here as extremes for the NASDAQ. Let's go over to the daily and take a look at that. Daily patterns are just like with the S&P, looking for a couple more days of drifting down. We should get to the 21, 11,480. I saw somebody comment, can we get above 12,000 today? No, I don't think so. I'm not sure what would cause that. I guess a smile on every Chinese face in the world or something. That, like I said, that's a joke because I really don't think that the Chinese situation has much to do with anything. But we have seen a decent rebound here in the NASDAQ from the opening lows anyway. But this is the daily, so we're looking at the lows here. 11,470 would be an extreme, and we just look at the market grid here right now, and what we're seeing is that the grid is right now that the low has been 11,642, and we're looking right now at the market grid. It's over on the far right, 11,687 S2, S3 11,637, and STX 11,592. So we're just trading right around the S3 level on the NASDAQ. So look, like I said earlier, from a R1 standpoint would be an absolute extreme, and that's sort of a dream right now because R1's 11,827. We're trading 745. That's a pretty decent rally from here. I don't think you can get there, but use S1 11,737, 11,687 is probably going to be your resistance. Use the S2, S1 numbers as resistance for intraday from that standpoint. As I mentioned earlier on the RTY and the Russell, we are seeing a little more weakness here. Right now, the low has been 1852. We look at the market grid here. S3 is exactly 1852, so we're hitting S3 right now, extreme 1847. I suspect we're going to stabilize here, but like all of these indexes, it looks like there's at least a couple days sideways. It looks like Wednesday, Thursday, we could start to moderate just a little bit. We'll see as the week unfolds how this thing goes from the standpoint of what the patterns are doing on the overall range here on the daily. But we go to the weekly, we'll see that the patterns that are setting up here are similar in that we're seeing some acceleration here, and the underlying, like I said, the 10-period moving average, simple 10-week moving average is the ranges that you're going to have to pay attention to, and we're going to stay above all those on all the indexes. That's going to be your primary support here on these trends. Next, we'll cover the Treasuries. So I've been talking about this. There's some downward projections. We're getting closer and closer to those projections. I mean, these are crazy numbers to even mention, but 3.37 is fib target 1 here. And we look at the low of the session right now, 3.66, and there's actually no support under this market other than the market grid, which right now, let me give you the week. This is a weekly chart here, folks. So we're looking at the market grid. 3.63 is S1, so we're close to an S1. S2 is 3.56, 3.49, 3.43. I don't know that we print down into those levels, but we're likely to stay well within this market grid on a weekly. But look at the algos here. They're suggesting that the 10-period moving average, that we're going to stay below the 10, which right now that 10 average is 390, and this is weekly, so this is not going to change much right now, but we're going to start to accelerate down, as well as the as the pattern, I guess what the pattern that's setting up here is suggesting we're going to come down probably to around the 21,346. That puts us into that range I was just talking about. That's an S3 print on that. And there's some pretty good support, and it looks like at least for the next couple of weeks that support level is going to be pretty good. But, I just said out loud 346. Okay. That's, we were talking in the four handle. Now, we had what up here, we had a 430 handle, and now we're talking a 340 handle. That's a big deal. I won't go through the yield curve right now, but I will consider, I'll probably go through this as we come through the week. Like I said, remember, I'm going to say it again. I'm going to go to the 9 p.m. Broadcast time like before, and after the break, I'll get all this stuff stabilized that I need to do, and that'll give me a couple of weeks to put a pattern together that I can stick to and be consistent. So I apologize for switching around from that standpoint. But the bottom line here on the treasuries is we're going to stay well under 390, and we're probably sandwiched. We're going to call it 340, 390, and that's just inverting that yield curve where you have the front end, the Fed funds printing, they're printing more like 390s, and then you got the 13-week at 415, and then you got the 2-year a little bit higher, and then everything below on the back end, the 5s, the 10 and the 30 are all much lower than those areas. So you get that inversion on the yield curve, and I guess that's the way Fed wants it. They want to induce some sort of recession. I didn't mention it earlier, but we do get the JOLTS number on Wednesday as well, and see if that number, I think it dropped down to 10.2 million jobs out there. Let's see if that number starts to soften as well, and I guess the best thing you can do is try to figure out what metrics the Fed is actually looking at all. What is the metric they're trying to do? And like I said, I think their main effort right now is not their dual mandate of employment and price stability. I think right now they want unemployed people, and they want inflation down, and that's why, if you think about it, Powell already told us about this, right? He said there's going to be pain. So what did he mean by pain? He meant unemployment. And so they're going to keep pushing this, folks. This is not going to go away for a while. They're going to keep that front end of the curve elevated for a while. And possibly one of the things that's interesting, I know a 7% mortgage sounds, a 6+ to 7% mortgage sounds like a big deal. I bought a house in California many years ago. I think it was 13.75 or 13.25 interest rate. Didn't even blink an eye. Everybody it was like credit card debt. It was amazing. No one thought anything about it. And housing prices were actually rising, not at crazy rates, but everything was working even at those levels. So you have to remember in 1980-81, we printed up into 20% interest range. And yeah, we were in a recession. There were a lot of things going on. But coming out of that, all of a sudden, after seeing, this is a psychological effect. And then we're having the inverse part of this, just to talk a little bit about the interest rates here. But we're having the inverse effect right now, where the perspective back in the day I'm talking about was all of a sudden to see rates not at 20, but at 13 or 12 or 11 was like, oh my, this is a bargain of a lifetime. I can't believe we're getting a 12% mortgage. And now it's the inverse, where we were getting 2 and 3% mortgages, and now it's doubling up, and we're getting 6 and 7% ranges. So markets can adjust to these things, and there'll be some stability probably come into the real estate market, and everybody has to start changing their forward-looking pricing and all of the elements that interest rates cause you to do when they're like this. It doesn't mean the economy can't work in a higher interest rate market. Like I said, we're talking about 340s, so we're probably talking about mortgage rates getting back into 5 handle somewhere and stabilizing 4.8 in the mid 5s. And people adjust to that. That won't be as big as issues. So there's a number of things. As we come into 23, it's going to be interesting when we start to get in deeper into some of the conversations that we're going to have around inflation and the economy and output, and all those things are going to be interesting. And hopefully I'll be able to come up with some ideas and concepts that we're going to be able to deal with from that standpoint when it comes to the what the economy and all these, how everything's going to settle down, because what we're coming off of this spike and we're going to drop back. And like I said, it's more about psychological perspective that's going to affect the marketplace even more so than the actual pricing when it comes to it. And so folks are trying to adjust, and they will. I don't think we ever go back. I hope not, actually, that we ever go back to these zero rates. This is actually where we're trading right now, is a very reasonable rate environment. 3.5, I'm just going to say 3 to 5% on a 10-year Treasury. That's fine. Markets, economies, everything can work in that range. It's just that we've had this artificial situation that's been going on for years and years. So there's going to be a readjustment, and everything from this point forward will cost more. There's no way around it. And, they inflated the bubble. What they're trying not to do is burst the bubble, but just let some air out, right? That's the goal, AKA soft landing. Can they engineer it? Who knows? Maybe they can. But the point is, everything is going to adjust to this pricing that we have right now, and that's exactly how things are going to go from that standpoint. So, I guess the best of what we can expect is that we do stabilize around this 3.5 handle on the 10-year, and we start to see this. So let's go ahead and get into. We'll cover crude oil next. Okay, folks. So crude is continuing to decline. I've talked about this in the past where we had some of these downward objectives. 86 was a handle. I thought 71, 76 seemed basically ridiculous. We've had a low of 73.60 today. So fib target 2 is the 71 handle, and then the fib target 3 is 62.90, 89 to be exact. And what we're seeing here, though, is that things should start to stabilize, at least on the front end of this. We may print down into this 70, 71, 72 handle. Like I said, we printed 73.60 already. We're 75.24, so we've rebounded off of those extreme lows. But that should put us within, this is a weekly chart, by the way, we're looking at. This does suggest that we're going to start to stabilize, should be around these numbers here. Let's go to the short term, and just so we can get an idea on what that looks there. And we're seeing, let me get this scaling just a little bit better for you. What we're seeing here is some pretty drastic moves to the downside. It does suggest that we're going to start to stabilize over the next several days, but this 10 period moving average is going to be your major resistance right now, 81.05. We should see that 81, 82 level be the upside. On the downside, I would use those weekly numbers at 71, 72 handle as a key level to watch. If we break below that, then we're going down to fib target 3. I don't think that's the case. It looks like there's still all of these moving averages are rolling over here. So this downtrend is actually gaining strength. But the question is, really, is why is it gaining strength? Is it gaining strength because the economy is starting to soften? Very possible. I haven't brought in, and I'll just talk about it in a minute right now, is, of everything that, folks are talking about the whole Chinese thing affecting sentiment. I think this is clear demand. I think if anybody's worried about anything is a potential rail strike. That's becoming more and more real. I think that there's a split in the unions that are going on that I think will potentially play out, whether they get a strike, does Congress intervene? I mean, that would be just pretty devastating because everything that ships, including crude oil, would be affected. So I'm going to argue that it looks like there won't be a rail strike, because if there was, crude would probably starting to catch a bid. So we'll watch see what comes around with that. I think it's December 7th or the 9th deadline on some of the union stuff going on there. But the point is that we would probably see some reflection of those concerns primarily here in crude oil, I think. So what we're seeing, though, is the opposite. We're seeing lower prices. We're seeing things starting to come back in quite a bit. And what that most likely means is maybe we're finally getting some serious demand destruction going on. And just tying everything I've been saying together in this broadcast is that what we're likely to see is that the employment numbers, maybe the continuing numbers start to climb. And like I said, this employment report coming on Friday is not going to be really affected by this at all. But what we will see is that there is a pattern toward this demand destruction, and the Fed, I'm sure when we hear them talk, they're going to just continue the same messaging that they have been. And even though they might, everybody's talking about a Fed pivot, there's no pivot coming, folks. They're going to keep this thing inverted for a while. And going back to what I said just a minute ago when we were looking at the Treasuries, that's what's going to happen, in my opinion, is that we're just going to see markets start to adjust to the new forward pricing and how these interest rates are going to affect. Now, there is virtually no activity in commercial lending and things going on, but there shouldn't be. The economy is, we'll just say, stable, but there's not a lot of growth there. So until we figure out how to deal with these new pricing elements, primarily in the cost of money, there's going to be a lot of change, things going on that are going to change and affect what's happening here from the standpoint of all of these prices that we're looking at. Next, we'll cover gold, and gold continues to trade just below the 200. What I was talking about is we should continue to consolidate just below this number. It looks like there's a few more days, but the 10-period moving average is trying to turn down. Looks like we're going to have some challenges here. I don't know that this is the daily chart we're looking at. We'll go to the weekly here next. Algos are suggesting stability above the 21 right now, which is 1719. I talked about this last week, around 1700, 1720. These are levels that need to hold to keep some decent upside expectations together. So let's go over here to the weekly, and it's interesting. We did get some weekly upside projections: 1764, 1820, and 1854 on a fib target, and the weeklies are suggesting that. Let me just see if I can rescale this. There we go. Are suggesting that we're going to have stability above the 10-period moving average again, which is right now, let me get that value for you, 1703. So look to stay above 1700. The 200 is actually encouraging from this standpoint. It's actually get a positive upslope, and that's at 1740. So I would look at 1740 as the upside range from the standpoint. We got resistance right now, around that level. That's pretty much right where we're trading right now. It's going back to daily, 1748. So just look for it to continue to consolidate under the 40, which is 1800, and probably remaining above the 21. The worst case is going to be the 1703. So look for sideways consolidation. You can trade this market around those kind of ranges right now. All right, I'll cover Bitcoin next. Bitcoin continues to be under pressure, like I was talking about in the opening comments, is that really what's happening here is suggesting that we're going to have lower prices. The algos are still projecting some things, but we did get some new downside projections, which is encouraging that the pattern was generating something that we could grab onto, because in the past we've been talking about a random number of 13, or I have been, between 13,000 and 10,000. Well, now we have a little better pattern that is set up here, and we've got this range at 14,418. That's the fib target down 1. Low target 2 is 11,722, and fib target 3 is 10,058. So there is some numbers. We had some ridiculous negative numbers that were being projected. So this is stabilized a pretty good downside range. And within the market grid, this is a weekly chart. Within the market grid here, if we look at this week, we're looking at S1 15,787. I believe that is, let me look at a couple numbers here, folks. Yeah, we got down to 15,784. So what we're looking at here is from a market grid. This is a weekly chart again. From a market grid standpoint, we're looking at S1 15,787. Basically, S1 is a retest of the lows that we made in this pattern. A break below that's going to send us down to these fib targets, 14,418 and potential 11,722. So these are going to be critical levels to watch. And I actually think you can basically throw out any of the correlations that are out there as far as the, comparing equities with Bitcoin. I don't think that has anything to do with anything. The crypto market is so upside down, and from a market sentiment to, where's it safe to put my coins, and everybody trying to decentralize and put in cold storage and all those things that are happening out there. There's just a lot going on, which means potentially the things that are on centralized exchanges being moved around a lot, that maybe that could be a stabilizing factor, just as the urge or the ability to be able to trade these coins are going to be off the market. So maybe that could be an element that saves the market from the standpoint of of market sentiment and everybody just getting everything off the exchange. There's there's a lot of talk of of these exchanges having one-to-one Bitcoins, not being a fractional environment. Bitfinex is supposedly their fractional environment. Everybody's struggling to find out what's safe and what's not safe in this space, and it's very difficult to figure out the real information from the other stuff. And you don't even have to bring in SBF or anything else. It is just total disarray in the community, inside of the crypto environment, and everybody has an opinion. And I'm just going off of the quantitative stuff here, but the bottom line is there's no one knows what is going to happen from the standpoint of whether we print down into these numbers that we're talking about, where we get down to 14 or 11,000 or even 10,000. It's hard to say. The algos, though, are still continuing to suggest that the markets are going to get under more pressure. And just from an algo standpoint, we'll find out if these things play out or not. But it is suggesting that next week is where we're going to see the most acceleration. And with everything that's going on in this market, is this really where there's going to be some big reveal and there's going to be more clarity what went on with FTX and all this stuff? It's pretty amazing. I keep telling you folks, if you haven't been on, there's some giant Twitter spaces going on right now with 5,000 and 10,000 people participating. There've been some really good speakers, people that know what they're talking about, people that started coins, people that have exchanges. They've been very transparent on a lot of stuff. I've been very impressed with how basically the crypto community has come together to at least discuss the plus and minuses of what's going on. I don't think anybody that I've heard is making any predictions or any comments about other than what I'm telling you right now, is that things are very much in disarray, and market sentiment would be impossible, I think, at the moment to figure out. And I think everything's very emotional and could even get more emotional. And once again, going back just to the quantitative, is looking at what the algos are suggesting, that there's some really substantial downside in this market yet. Maybe we'll get a couple weeks, we'll get some stability and this downside will moderate, at least from the prediction. But right now, it appears that it's going to get pretty bad from that standpoint. Okay, folks. As we wind down today's broadcast, remember, mark your calendar, put a clock about a little bit more than 12 hours from now. I'll be live again tonight. I think that's just the way it's going to have to be. So actually, it'll be not 12 hours. It'll be at 9 o'clock. So p.m. tonight. I'll try to get on maybe a little bit earlier, but for the most part, I'll try to get back on the old schedule, and that will be until Thursday the 15th. Then December 15th will be the final broadcast for this year, and then I will, like I said, I'm going to have better access to things as into this year than I have in the past. I've been pretty much blocked out, and it's kind of interesting to get unplugged from the internet, but it's a challenge, especially with other things that are going on. So anyway, see here, I just seen what you folks are talking about. Yeah, so here's the other thing I will do. One of the things I do like about the daily schedule, we'll have a quick chat here for a few minutes before the show's over. But one of the things that I think that I do want to do is keep some of the elements that I was doing on going back to evening, such as, on Tuesday night video talking about stocks, and Wednesday being a macro, and Thursday being commodities. I like a lot of the stuff that I was trying to do. Like I said, I'd have to get up at about 4:30 in the morning to do a decent job at this time of the hour, and in my opinion, it's just not working on some of the things that I would like to get set up. I feel like I think the perspective that I was able to give you coming into the next day and having a glance at the overnight, it has been really much more impactful, I think, to your folks trading and to our clients with software clients and everybody. So I've chatted around a little bit to see, but it's really, like I said, some of the reasons I was doing that are not in play at the moment. So I will continue on. So folks, to just tell you, I am make sure that you, if you have some interest, these algos have been amazing. The PPMs are amazing. Understanding the angle of attack, everything that I do. Just remember, if you do get the indicators, you get into the live room, and it's 30 days. In this case, you're probably going to get just the next couple of weeks because I'll be off. But I've got some ideas for the live room and some of the things that I want to do, because there's a lot of things that we do. It's behind a firewall and a private network, so it's a much better. It's not YouTube. There's no lag. There's no nothing. And we can really do a lot of really interesting things in that room that we cannot do in a live environment or in a public environment. So, please consider that. And I think 23 is going to be a very interesting year. I think we're going to see just a lot of changes. Still have my secret project working that I want to reveal to you. And like I said, I hope you guys and gals don't mind me switching back to the evening, because I think it just makes more sense from that standpoint. It's a good thing. So we'll make the best of it. And anyway, so we're here just a couple minutes early. Just looking at a couple of comments that you have. Yeah, I know, Eric, you've actually asked a number of times. TradeStation is a really good platform for trading futures. I think you'll see. Just looking here. Yeah, I think I'm just looking at some comments you folks are making. Yeah, and somebody said it right. Don't forget to hit the like button. And, like I said, I think the nights are better. I've got a pretty big European, Asian following that this morning doesn't work for and doesn't really set up things really well. So, like I said, going back to evenings will be okay. I'm okay at having late dinners. It's all good. So anyway, folks, thank you so much for watching, so much for putting up with my craziness, from going back and forth here, but it'll all stabilize. And we got a great year planned ahead for 23. I've threatened for the last couple of years, I'm going to do my best to make a physical conference happen sometime in 23. And I know hopefully some of these crazy COVID restrictions and stuff come off, because I know there's a bunch of you in Europe that want to come over to this event once I do it. But I am going to really focus on getting that done. I think it would be amazing to meet a lot of you and have a conference on there. So, hit the like button. We'll see you tonight, not tomorrow morning, tonight for Tuesday, and I'll be going through some stocks and some other elements in tonight's broadcast. So thanks again for watching, everyone. Have a great day trading, and we'll just watch how everything unfolds. Those of you in the live trading room, see you at 1 p.m. Eastern time. I'll be there on time. Thanks a lot, everyone. Hey, Donald Trump, I'm sure you're a good guy. I really don't want you using my podcast to put your ideas out. So please consider that for me. I appreciate it. I know you're here every day. Appreciate you being here. Just keep that in mind. Yeah, Donald Trump, Donald's Trump, you understand. I appreciate you. Thank you.